Hello, my name is Taylor. I'm a financial coach, and I help my clients get set up in Monarch Money so they can use this app to its fullest capabilities. Most of the clients I work with are also trying to work on creating a budget, paying down debt, and so I want to talk about credit cards and loans and how to deal with those in Monarch so that you can accurately track your debt payoff or your progress towards your debt goals. So I want to get started by making sure that your credit card payment category is in the right spot. So I'd recommend you do this with me. Go ahead and log into your Monarch, pull up your settings, that's that gear icon right at the top here, and then go to your categories. Note there are 3 types of categories in Monarch. There are income, that's the income group right here, expenses, it's the expense group right here, and all the way at the bottom, there are transfers, third group. These are the only main types of categories that Monarch has. There are no other types of categories, so there are 3 different functions of categories. So you have income, expenses, and transfers. Transfers really simply are neither income or expenses. That just means that if you mark something as a transfer, it will not show up on your budget and your cash flow because your budget and cash flow is only showing you income and expenses. So transfers are really left out of reports. And the reason why is so that we don't accidentally double account things. We're not marking things that shouldn't be labeled as expenses. So your credit card payment should be down here if you have connected your credit card payments to Monarch. Now, what I mean by that is if you go to your account page and you see your credit card accounts in here, they are feeding transactions. When you click on this, there are lots of transactions here that you can look at. That means that your credit card payment belongs all the way at the bottom in the transfer section. If you moved it, if you put it in the expense section, then take it out, put it back, okay? That's one of the most common things I see people doing is taking this out of the transfer section, and it needs to stay here. Why does it need to stay here? Well, if you go to your reports and cash flow, look at our cash flow right here where it's in when the category is in where it should be. The cash flow is showing you total income, total expenses. If we went to just spending, same thing. It's showing you what you spent. All of this money is a mix of money spent on the credit cards, right? The doggy vet, let's see, another credit card, Whole Foods, right? These are the expenses. The $260 spent at Whole Foods are the expense. The credit card payment just paid off the expense. We're already counting the expenses. The swipes are the expenses. So we do not need to mark the transfer as also an expense. If you were to do that, it would make your expenses look extremely high. So if I were to select a credit card payment that was inside the expense section, so like within all of your expenses, look how that changes that cash flow report. We're seeing way higher expenses. And if you take a look at spending here, no, wait, hold on. Let's get this refreshed. There we go. All right, so we created this, we added this as an expense line item, and notice that it changes that total net income dramatically. If you look at your spending, also dramatically higher. You're seeing your credit card payment as an expense when really it was the trip to the vet or the grocery store that was the expense, not the credit card payment. So I really want to stress that if you have your transactions and you're using the card, you're swiping on it, this needs to stay as a transfer or a transfer type category. All right, now there is an exception to this. If you have a credit card that's just not connected to Monarch because you're kind of treating it like a loan, that means you maybe open a credit card for like a 0% thing and you don't swipe on it like Best Buy or Synchrony when you bought furniture, right? You might have a 0% interest credit card that you're just slowly paying off. You're not using it like a credit card because you're not swiping on it, right? There was just one big expense, now you're paying it off. So we're actually going to treat these more like loans in Monarch Money, and you can create a category specifically for that. So I would create an expense category and I call it, instead of credit card payment, because it's not really a credit card, I'd maybe call it just more specific, like Best Buy loan or credit card / loan if you want to make it a little bit more specific. That way you can treat that payment as the expense because the payment is the expense to you, not necessarily the swipe originally when you bought the laptop, unless again it's connected and we see that laptop or the furniture purchases or whatever you want to see. Or if you're just not wanting to connect your cards, you kind of want to treat them like you're not using them, you've cut them up or whatever, you're just trying to get them paid off so you can move forward in life. Maybe you just don't connect your credit cards at all. Well, then we're going to need to mark those credit card payments as expenses. Okay. So if it's connected, leave it in transfer. And that's the majority of people. Majority of people are going to connect their credit cards because we're wanting to track the balance and wanting to track paying it down. This is what most people are doing. Just leave it as a transfer. And when I say transfer, I just want to stress again, I'm still saying mark it as credit card payment. Credit card payment is a transfer. This is a transfer, credit card payment. Okay, so mark it as credit card payment. And you'll notice for this, as an example for this, if I were to filter for credit card payments, You'll see too, there's an expense, there's a debit of money leaving the checking account and then money being received by the credit card. That's the green, the credit, right? So there's two. You both mark both as credit card payments and you're set. They're both marked as transfers. They're not affecting your cash flow and you're all good to go. Okay. So how to budget for them? Well, budgeting for credit card payments is only necessary if you are trying to pay off the card while you are, or trying to pay off the card, right? If you're paying it off in full every month, the statement balance in full, you're staying current, then you can ignore everything, tune me out, and wait for the loan section. So don't need this next part. But if you are trying to pay down a balance, you need to create a goal for your credit cards, especially if you have them connected. And this is only if you have them connected, okay? Still, we're looking as if most people are connecting their accounts to Monarch. You're going to create a goal for the credit cards. That means that any transactions coming from the credit card can be attached to the goal. So most people are going to stop using their card, and this is what's highly recommended, is stop using the card. Stop swiping on it as soon as you're carrying a balance. Pay that off, and then you can start using it again. There's no amount of points or benefits that make any sense to continue using the card unless you absolutely have to, because you are in a situation where you have to spend more than you make right now, okay? And so if that's the case, you have to do what you have to do. But if you are trying to pay this off, then you stop using the card, okay? So if you are wanting to see your credit card payments here, what's going to happen is if you're going to go to your gear icon, you go to rules, and I'd make this rule. I click on create rule. And what I would do is I would create the rule that says if the category equals credit card payment and it comes out of the account that we have attached to the goal. So in this case, it would be this credit card. You can only do this for one credit card at a time. You can't do it for multiple, as far as I'm aware. This is the rule you're going to make. You can screenshot this and set it up, and that way it will apply all of your credit card payments to your goal. So if we went back to goals now, we're going to see all your credit card payments in a nice neat row here to pay off. Now this is good. All you really need to do if you're not using your card and you're just working on slowly paying off that credit card. Okay, this is technically all you really have to do. If you are trying to pay down the card, it gets phenomenally more tricky. Monarch does not deal with using the card and is trying to pay it off at the same time. It doesn't give you a really clear indication of what your payment is versus what you've put on the card, unless you do some things that make it a little tricky to budget. There's trade-offs, okay? So first off, I just want to point out that you always budget in the budget line item here. You will always budget for whatever payment you're making toward the principal. That means you don't budget for what you paid off last month or what you put on the card. You are budgeting for the actual principal that you are paying off. So if you're trying to make an extra payment, so if you're trying to pay off what you put on and make extra, you're only budgeting the extra, okay? Because right now you're budgeting for the expenses, what you're putting on the card up here. Everything that you're putting on the card is already accounted for up here. You don't need to account for it twice. So the budget is always extra payment. The goal, we're focusing on the goal, right? The goal is to make a pay down. We're trying to put money toward the goal. How much are you actually putting toward the goal this month? Maybe it's zero, maybe it's some. But if this number right here, if you can make it, we made a big $6,000 payment on the credit card. If that's because I put something on the credit card for last month for $6,000 and I'm not actually making a dent towards principal, then you can leave that alone. You don't have to put anything right here, okay? And you can just say, hey, I had to pay off what I put on this month, okay? And then you know you're not making any progress toward your goals. So you always budget what you're trying to, like what the actual dent is you're going to make for the goal. Now, if you are trying to figure out, well, what is this? What is this number? You can do that. So what's going to happen is that for last month, I want to show you this, for a pet transaction, let's say you had to put a vet transaction on the credit card. If you attach these items to the goal, these items right here towards the goal. So we're going to go for credit card here, and we're going to add this one to the credit card goal. Great. Did I do the other one? Great. Notice we spent $14.76 in pets in April. That's important. We spent $14.76 in pets in April. If I now go to April's budget and go down to pets, notice we don't have anything here anymore. That's because we're no longer budgeting it for it here. We're budgeting it in the credit card goal. Okay, so we're going to take it all the way down here, and now we're seeing, remember how you had made a $6,000 payment? Well, now it's telling you the actual progress towards your goal is not $6,000. It's subtracting what you've put on the card this month. So it's showing you, hey, you haven't actually made as much progress as you thought you did. So you can see how there's trade-offs here, right? It's nice to see maybe the difference between spending versus what you've paid off to like get what you truly spent. But the con is that it no longer shows up in your budget, which can make it tricky if you are trying to really diligently budget. Now, it still shows up in your cash flow. If you ran a report for spending in April, it still shows you how much you spent in pets, right? It just doesn't show up in your budget anymore. It instead shows up in the credit card goal. And if we click on that credit card goal, it's going to show you that net difference of what you put on the card, what you put charge the card, and what like progress you've actually made toward your goal. So there's trade-offs. It's tricky. You can kind of decide what makes sense for you. Like I said, it's just going to be easier. And this is best practice. This is not just something I'm saying, hey, Monarch sucks, so do this. No, it's no matter what budgeting app, even if you have a perfect system, it is still always better to stop using the card while you're trying to pay it off. So that should be your first priority anyway. And then that way, Monarch's side effects of not handling credit card stuff very well doesn't affect you too much. Okay. Now, a lot of questions I get is how do you handle credit card interest? You can do the same thing. You can hide the transaction. You can hide the transaction by attaching it to the goal so it doesn't show up in your budget anymore. You can also straight up just hide it. It's adding to your debt. It's really not part of your cash flow necessarily because it's just kind of adding to that balance technically. So I kind of do both. It just depends on if you're okay with it showing up as being deducted toward your minimum payment. That's probably the easiest way, and that way you can still run reports on how much interest you've been paying. That's a really helpful report for clients to see. And so if you hide it, you won't see it in reports, but if you just attach it to the goal, then it won't show up in your budget, but it will show up in reports. So, kind of up to you how you want to see. So this is what it would look like if you attach you haven't made a payment yet and you've attached the interest to the goal is saying, hey, in order to make $500 of actual progress towards your principal, you need to actually put $667 because you need to pay the $500 principal plus pay off the interest and you'll actually make a dent. But if you can't do that, then that's what you're going to have to be planning for. So you kind of have to budget additional for that interest or just allow the interest to accrue. So it's tricky. It's not the best. Like I said, goals and credit cards just aren't the best in Monarch, but you can absolutely do it. Now, something that I get asked a lot is like, how can you figure out how much to put towards the card? Snowball, avalanche, like the best payment strategy. You can't really do that with goals. There's no calculator to help you figure out what to make payments on, but that's why we use spreadsheets. I use a spreadsheet with my client. We enter in all of their debts and we figure out which strategy is right for them. We compare the debt payoff, the years or months to pay off, and the amount of interest you will pay on these debts to figure out and compare which strategy is right for them. So you really have to use other outside tools to actually figure out your debt payoff strategy, but you can absolutely implement it and keep track of it inside Monarch Money. Now, the last thing I want to go over is just dealing with loans. So we talked about credit cards, and now I want to talk a little bit about loans. Loans are funny if you connect them to the account and they feed transactions. If they're not feeding transactions, then no one has problems with loans. But if they are, then I get lots of questions. And what I mean by feeding transactions, I mean if you go to your mortgage or your car loan, if you click on this and there's transactions in here, then something funny is going to happen unless you handle these correctly. So you see these, it's green, it's receiving payment saying, hey, we've received your mortgage. These transactions are so unnecessary to have. They are so not necessary. There's almost no value in having them, and they really just get in the way. Now, they are what is triggering your goals. That's the only way you can really see if you wanted to add a goal of like paying down your debt. The only way you can use goals is if the mortgage account is feeding transactions. Not everyone does, which makes goals kind of useless in that regard. I still find goals fairly useless though, so I never use goals for any of my clients, and I really don't recommend using it except for credit cards, of course, but the rest as far as debt goes don't really make a lot of sense and they're not helpful. So I just want to point out that because when you see two transactions, you're gonna if you mark them both as mortgage, then you will be canceling out. Look, it shows I didn't spend anything on my mortgage, but that's because I've marked both of these as mortgage. And so what we need to do is actually mark the green credit, the one we really don't need, as a transfer. I recommend doing it just as a transfer to get them kind of getting rid of. And we're going to create a rule for this. What I recommend doing for your rule is just basing it off of account. And if the account is a mortgage, a car loan, or any other loans that you don't need transactions from, I would base that rule off of this, and I'd mark every single transaction as a transfer. There is no reason you need any transactions coming directly from your mortgage and car loan almost ever. If you have exceptions, please leave them in the comments. I'd love to hear them, just so other people can be aware of the exceptions as well. But your mortgage, you probably don't need transactions, so you're going to go ahead and save this rule, and it will allow you to actually see your mortgage actually show up in cash flow. When you run a cash flow report on, hey, how much did I spend on my mortgage in the last few months, it will now actually show up. So if yours is not, then it means that you might have some transactions canceling it out, and that's not great. Okay, so as an example too with the auto loan, okay? Auto loan, you have multiple transactions, and if you wanted to do, let's go ahead and clear this out. Let's see here. You might be seeing two types of transactions. You will see the debit, the amount leaving the checking account, and the credit, the amount incoming into the loan account, and saying, hey, we've received your payment. These receiving payments, so unnecessary, and all it does is make it so that your reports are not accurate. And so if your reports are showing huge gaps, even though you've made payments, it's probably because these guys are canceling out your payment. It's canceling it out, and it's not showing you what your actual payment is. So again, we want to mark these as transfers. You'd set the same rule. You'd base it instead of off of the merchant. We're going to turn merchant off, and this is your transfer, and we're going to go ahead and attach the Honda loan instead. Okay. Now, you can use goals to remove it from budget, but the problem is it also still will cancel out in reports, so you really just have to mark it as transfers. You just have to kind of get rid of it. You can also hide them, but here's the thing. I don't recommend doing that, because what happens is you will have a lot of clutter here, and there's a really tiny little eye icon that shows you've hidden it, and it's so much cleaner data to just see the payments just like this without all this extra clutter that you don't need. So I recommend just removing it completely from auto payment, putting it into transfer category, and that way you have clean data, you have a clean report on how much you've put towards that auto payment. So all right, I hope that's helped. It is complicated, and if you have scenarios that you would like to run, I have workshops every week inside my membership where we go live Q&A and we talk about these scenarios, and we can walk through step by step what it looks like, how to budget for it, all the things to consider. So please consider joining. The link is in the description of this video, but otherwise I hope it's helpful, and you can subscribe to learn more about Monarch. I post videos regularly about using Monarch Money, so just to get you as expert as possible. Thank you so much.